at the start, just to show our operation and how it operates and where we're located. So Blackham Resources is an emerging gold mining company out of Western Australia. We're located in Perth, is our head office, and our mine is in the middle of Western Australia, a place called Wiluna. Wiluna is the northern extent of Australia's biggest gold belt. It contains Kalgoorlie, Leinster, and finishes up at Wiluna. Over the last 7 years, Blackham's put together 1,400 square kilometres of tenure, and when we started here we had 300,000 ounces, and over the last 7 years we've built that to 6.7 million ounces of gold. This photo there you saw was our camp. This is our open mining operations you're seeing now. That's a blast going off. We're now got some drone footage coming back over our plant, and that's the crushing circuit in action, the mills in action, and there's a truck coming out of one of our open pit mines. So we've been mining to date mainly out of the open pits down of our Matilda mine, which is 20 kilometres south of the plant. Where you see now, we're also operating in our underground mine. Recently in September, we've also come back and started mining the open pits right at the Wiluna mine, which is right next to the plant. This Wiluna mine historically has produced over 4 million ounces of gold, so this is a big mine. So it's good to be back operating in that part of our operation. What you're seeing there is a gold pour, so that's the final product that comes out, about 90% gold, 5% silver. We then send that off to the refiner to take it to 99.99% gold. So there, our reserves you saw there, we've built them to 1.5 million ounces, which have increased 27% over the last year. The historical pits you're seeing here have all got declines in the bottom of them, and that northern decline in the northernmost pit you see there goes down 1,200 metres, and so it's a very extensive underground mine. The history here, over a 120-year period, it's produced 4.4 million ounces out of this project. You can see, the oxide production and then the sulphide production. Later this year, early next year, we'll finish a feasibility on putting a new sulphide plant in, and that's the location we're going to put it, next to our existing plant. We also plan to ramp up the underground significantly when we go back into sulphide production, and we're looking to ramp that up to in the order of about 1.5 million tonne per annum. So the orange pits you see here at our Wiluna mine, we're currently mining. We've got oxide reserves there of 157,000 ounces. That's about 2 years worth of production for us at the current rate. There's another 710,000 ounces of reserve at 2.8 grams per tonne sitting in those green open pits. Below the big pit to the south, we see our planned underground operation there. That's a very sizable operation, and we're just finishing the engineering work on that. But it's still at very shallow depths. You can see the northern end of the mine goes down over 1,200 metres, and that's been mined extensively. So with the video finished, I'll just flip back into the presentation. So over the last 7 years, Blackham Resources has built this very large project tenure-wise, but also resource-wise. There's over the years, there's been in the order of $500 million spent on the geology at today's dollars, and that's produced that very large resource, 6.7 million ounces. 58% of that is of an indicated resource category, which means it's of the category for a feasibility study. It's a continued work in progress, converting that resource into reserve. You can see currently our reserve is sitting at 1.5 million ounces at 1.8 grams per tonne. So that's mainly coming out of the open pits, and that's why you see the grade profile is lower than the resource. The next job is to finish the infill drilling on the underground and the conversion of that into reserves. So right now, the stage 1 operation, we're producing in the order of 80,000 ounces a year. The last 3 quarters we've produced 59,000 ounces at an all-in sustaining cost of $1,000 US. The forecast for this financial year through to June is up to 89,000 ounces of gold, and we're continuing to focus on reducing our operating costs as we go. In the video you will have seen where we were putting our new plant, and that becomes a very capital efficient step change to grow the operation, and the reason for that is that all the infrastructure is in place and a lot of the underground development is already in place as well. So that expansion we're looking to have in place over the next 2 years and to grow the operation to over 200,000 ounces a year. The current reserves, 1.5 million ounces, would maintain a 7.5 year mine life at that rate, but we've also got 5 million ounces outside of the mine plan which we're continuing to convert. So that's the share trading history over the last 9 months. Right now we're trading at about 4.5 cents. Gives us an enterprise value of about $71 million. Our enterprise value over the last 2 years has been as high as $300 million, and our production at the moment is as strong as we've seen. So over the last 9 months, we've really focused on strengthening our balance sheet, getting into solid operational cash flow and showing that consistent cash flow as we move forward. We're producing 20,000 ounces a quarter. This quarter we're expecting to see that nudge up a little on the back of additional grade profile coming out of our Wiluna open pits, which we started in September. The operations have been significantly de-risked over the last 2 years, and we're continuing to de-risk the expansion opportunity, and getting into those larger sulphide pits. Well, mining the oxide pits first will allow us to further de-risk those pits as we go forward. So we've demonstrated stable production. Looking at where that's coming from, our Matilda mine has provided most of the feed over the last 2 years. The Wiluna mine is back next to the plant. We're also mining in the underground at Wiluna, which is our Golden Age ore body. This is the production over the last 12 months. You can see a step up in production from the December quarter last year. We've got into strong ore out of our Matilda mine in December. We saw grade profile increase, and we've been producing at that higher 20,000 ounce rate for the last 3 quarters. When you look at the mill production, it's increased about 10% each quarter, and it's pretty much maxed out now, and we're running at close to 2.2 million tonne per annum. We don't see that getting too much higher out of the current plant. The crushing circuit, the milling circuit, and the leaching circuit is all maxed out. So the focus now is on getting further grade profile out of the mines and to continue growing the production. Excuse me. So this is the Matilda mine. You saw us digging that in the video. This will be 60% of the feed over the next 6 months. Getting into the Wiluna mine, you can see the oxide pits in orange and the green sulphide pits. That big pit to the south has got 650,000 ounces at 2.8 grams per tonne. That's a very, very big pit, 700 metres wide, 1.5 kilometres long, and goes 250 metres deep. The photo you see there on the right is the starter pit to the north of that big pit. The Golden Age Underground Mine is our highest grade operation, and this is where we're pulling the best grade profile. We're currently only mining about 202,500 ounces per quarter out of that mine, and we've got plans to ramp that operation up. This graph you see here is a graph of our resource growth over the last 7 years. So when we started in 2001, we bought into this project and we bought 300,000 ounces. The blue ounces you see are ounces we've acquired very, very cheaply over the last 7 years, and the orange resource growth you see there has come from the drill rig. All of that's been done at $7 a resource ounce, which is about $5.50 US, and we're currently producing at margins of $200 to $250 an ounce. So it's been a very cost-effective growth in the resource, and we expect to see that continue. This is the Golden Age Underground Mine. We're currently operating right at the bottom of this area, down here. The pink and yellow areas you see there have produced 180,000 ounces at a very strong head grade of 9 grams per tonne. We're currently mining up against a dike down here, and we've just drilled on the other side of that dike, and we've had some really positive high-grade results. And we're going to start developing by Christmas on this lower area. So we were expecting that this mine was going to finish by about April, and with the further drill results we've had, we see a lot of potential for this to continue. Having delineated these further ounces down here, the deepest hole is about 200 metres down dip. Now, just to put that into perspective, you've got 300 metres of strike, 200 metres of dip. That's about the same size as what we're seeing up here that's produced 180,000 ounces. Hopefully it's just as continuous, and we'll get a very long extended mine life out of that Golden Age mine. At surface, we've also had a lot of success. We've recently drilled to the south of the reserve pit you see here in blue, and the new pit's looking like it's going to pull another 400 metres to the south. But the more exciting part here is really the underground potential. The old timers mined 27,000 ounces out of this area from an underground point of view, and that came out at an average head grade of 17 grams per tonne. We're currently drilling this area to a depth of 200 metres, and we see significant opportunity for some reserves coming out of that area. So if that drilling comes in, we could convert that to reserve very, very quickly. So this is our Pfs study to grow the production and the size of the operation. The current mill is operating at about 2.2 million tonnes per annum, which is about 20% above nameplate. The opportunity here is to bolt that new mill next to the existing mill. All the infrastructure is in place, and on the expanded operation, we'd be looking to produce about 3 million tonne per annum at 3 grams, which gives you a very, very significant gold mine. We're looking at average production of over 200,000 ounces a year. The bulk of that, 15 million tonnes, is coming out of the open pits, and this is where we've focused over the last 2 years. There's only 4 million tonnes out of the underground that's currently in that mine plan, and there's an opportunity to bring significant more resource into that mine plan. If we look underneath the big pit to the south that's got 650,000 ounces planned to be mined out of there, yeah, we see 2 big lodes that are drilled down about 500 metres currently. We've focused on infill drilling to 250 metres there. There's the eastern lode there and the western lode here. The historical mining you see there in gold, sorry, the brownie colour, they've pulled 2.1 million ounces out of that. The yellow and the blue lodes that you see to the left, there's another 1.8 million ounces of resource sitting there. So the ounces per vertical metre in what's left are 3,600 ounces per vertical metre. This is a big ore body. So just in summary, Blackham's continuing to show steady production and operational cash flow. The balance sheet's been significantly improved over the last 9 months. Reserves keep growing. Last year we grew it by 27%, and we see an opportunity to grow by just as much this year. The exploration programs are ongoing to continue to strengthen and lengthen the reserve profile, and there's outstanding upside as we continue to convert resource into reserve. Thank you very much for listening to the Blackham story, and if you'd like to know more, please come past and have a chat. Thank you very much.